And we're back at 23 minutes after. TrimTabs investment research says the stock party may be over. The independent research company that tracks investment flows says corporate insiders are bailing out of equities at a furious pace. For more on how fast investors are running for the exit, let's bring in TrimTabs CEO Charles Biderman. He joins us from Santa Rosa, California. So, Charles, good to have you back on Bloomberg. This insider selling, how much are we really seeing here?
Well, the ratio is 30 times buying, and we've been tracking this type of on a daily basis since '04, and we've never seen a number higher than 30 times. The daily rate is roughly equal to the high May of '08 and November of '07. That's the daily amount of insider selling. Insider buying is non-existent. We've never seen, and it's not only insiders. Corporate buying is non-existent. Corporate buying of buy back their own shares,
right,
buying other companies for cash, non-existent. So companies are saying they don't want to touch stock at any price here. They're sellers.
Right.
The new offering calendar is going to be huge starting the middle of September. And I'll shut up now.
That's okay. No, but one note that I saw from your research, companies selling a record $105 billion worth of shares in the past 4 months. So take the companies selling, take the insiders selling, add it all up, and what you think this rally shouldn't be here.
Well, I have no idea where the money's coming from to keep prices not plunging. I mean, all the hedge funds, if you look at aggregate data, hedge funds, mutual funds, they have to be fully invested here on all the data we see. The shorts have covered. Short interest is down 10%. Margin debt is up. So, yeah, they're borrowing to buy. And we're not and then when the new offering calendar starts again, we just don't see where the money's going to come from to keep stocks from plunging.
When do you anticipate a plunge? I mean, a lot of folks are looking at September. We know historically not a good month for stocks. I mean, does it start there in your view?
Well, that's how it's always started in September, when the new offering calendar and then companies want to bail out, and there's just no money available after all the indigestion caused by the upturn through the summer. Usually that's historically why September, October have been weak months.
Hey, how much of a downside, Charles, are you anticipating, and how long might that downturn go on for?
Well, I look at the numbers that the bureaucrats at the BEA, and I use bureaucrats as a nice way of saying what I really think. They're saying that incomes in July were up slightly from June. But you have 300,000, 400,000 less people working this month than the month before. Incomes per existing worker is not going up. So if employment is down, meaning incomes for all people left working, and wages aren't going up, how do they have incomes growing? Incomes are dropping. Things are not getting better. They're getting worse. So, I'm missing something here.
You're missing something here. All right. So, again, though, in terms of what kind of decline are you anticipating? Any idea in terms of a percentage drop here?
No, I just see that the market is way overpriced. I mean, was it cheap in March? Probably. Will it go back down there? It could. Markets go further either way than any sane person thinks.
All right, Charles.
Right now we're in a greed cycle, and when the fear cycle hits, who knows?
All right, we have to run. Charles, thanks so much for finding some time for us. Charles Biderman, CEO of TrimTabs Investment Research.